My name is Andrew Stonson. I'm going to welcome you to a presentation from one of our Valuation Masterclass Bootcamp graduates. And I'm interested in this one. I haven't looked at this company myself, so I want to learn. And I hope that you learn, and feel free to ask any questions. And even if you're watching this video long after it went live, still ask questions. We look at those questions and we'll try to respond. The company is Devon Energy, and I think we're going to hear some interesting stuff. So, are you ready to present?
Yeah.
Excellent. Okay, I'm going to leave in just a second and then you take over. Okay.
Okay,
All
thank
right.
you.
I'm going to leave now and then you start now.
Hi, hello everyone. Today I will discussing Devon Energy Corporation, a major player in oil and gas sector. I'm initiating coverage on Devon with a buy recommendation and a target price of 46 US dollar, reflecting a potential upside of 35% from its current level. This present will guide you through day one business background, performance highlights, financial, and risk. Day one is a leading independent oil and natural gas exploration and production company in United States, with operations focused in high potential areas such as the Permian Basin, Eagle Ford Shales, and Anadarko Basin. Over the years, Devon has expanded through strategic acquisition and technological advancement, enabling it to remain competitive and efficiency in a volatile energy market. Now let's talk about the story that support my buy rating. First, robust production growth in Q4 2024, production surged by 28% to 848,000 BOEPD, driven by the acquisition of recent new energy. Over 50% of the capital budget is allocated to the Delaware Basin in 2025, focusing on high return assets. Despite a drop in realized oil price, revenue lost 6% year-on-year to 4.4 billion, aided by improved well productivity and 8% reduction in all-in cash costs. And second, they want international expansion. The company entered Southeast Asia, where customer spending lies about 6%. McKinsey also firmed that expand to emerging market revenue will be 10% within 3 years. I forecast that this move could increase revenue by 7% in 3 years. About the quarter, in Q4 2024, revenue grew 17% year-on-year to 4.5 billion. However, gross and net margin declined significantly due to increased OPEC production and weak global demand. EBIT margin fell to 23% and net profit dropped 44% year-on-year. Despite this, the wall recurring EPS grew 26% Q-on-Q. Consensus estimate. Over 65% of analysts rate they want as a buy. The average target price is 49 US dollar, implying a 46% upside. Analysts forecast revenue growth increase from 5% in 2024 to nearly 9% in 2025, while EBIT margin are expected to stay around 25% over the next few years. Oil is the champion. Devon Energy Corporation's revenue structure is primarily driven by the sale of oil, natural gas, and natural gas liquid. The core revenue contributor is the oil segment, which accounts for 84%. Oil and gas remain the primary global energy source, accounting for 55% of energy consumption in 2023. However, the industry faced dual force. Short-term demand is fueled by AI-driven data center, but long-term demand could stop as the energy efficiency improves and EV adoption increase. By 2021, by 2031, the industry is expected to grow to nearly 9 trillion globally. To stay ahead, companies like Devon must diversify and transition towards the sustainable energy source, a potential opportunity for Devon if it executes strategically. For the four elements, Devon looks cheap on the valuation, fundamental, and risk are evaluated. Momentum is weak, but not a deal breaker. Overall, good value with potential. They won't remain a top performer in profitable growth. Expense control continue to offset weaker asset efficiency, maintain the company edge. For the gross profit, is projected to grow from nearly 5,000 to nearly 7,000 million. Inventory rise steadily, which suggests high production and sale activity. The major driver on the liability side is long-term debt that reflects their reliance on debt to finance its large investment in fixed assets. They want paying dividends regularly every year. EBIT margin forecast to steady at 26% and DE ratio is about 0.6. Return on equity is forecast to stay close to 20%. NOPAT on equity is forecast to stay close to 20%. NOPAT forecast to grow from 3,000 to 4,990 million and CAPEX is projected at 5,132 million in 2025. PB to ROE is far cheaper than US globally and also Asia ex-Japan peers. They want seem very cheap on a PE basis, trading of a PE of 7. I assume this fillet of 3.5% and terminal growth of 1%. COE is 17% and WACC is 13%. I forgot on FCFF which reflects operational strength. The DCF price is to a clear 75% upside. My sensitivity analysis length is 43 to 48%. It depends on gross margin. And for the main risk is rising energy costs. First, rising energy costs in electricity and fuel expense hard margin and may reduce capital for growth. Second, volatile commodity price oil and gas price can swing sharply due to global events affecting revenue and growth. And third, economic uncertainty like inflation, interest rate, and global slowdown can reduce energy demand and investor sentiment. In summary, they want energy combines strong production, cost efficiency, and international growth strategy to drive long-term value, despite short-term margin pressure and sector volatility. I see compelling investment case with 35 upside potential. My recommendation on Devon with a target price of 46 US dollars. Thank you.
All right, excellent. I picked this company because the share price has collapsed so much and it's so cheap that I wanted to, learn about it in the Valuation Masterclass Bootcamp. Let me ask you, a lot of things decline with this company. For instance, even if we look here, the ROE in 2023 was 32, and then it was down to 21. And we saw the declining trend in ROE. We saw the declining trend in share price. So some people may feel negatively about it and therefore low PE, low price to book. But yet you're saying there's a large upside. What is it that makes you confident that the market also will see that things are getting better for the company?
Um, why I think that the company have a upside because their story that they will have a production growth like in Q4 2024 and they also production surged by 28% and they have a plan to expand their production and they also use AI to reduce the cost for logistic costs that's estimated to reduce about 15% that can like to uh, boost their operating margin by 2%. And I think that the net margin in within 3 years is getting better and the price will be covering back.
And if I look at your forecast for 2025 for recurring net profit growth is 3.4%, then 6.7, and then 6 on this page. My question
Yeah.
is, are you being conservative in those numbers or realistic? In other words, could it be, 12% growth in the future, not 6? Or tell us about your forecasts and how conservative versus aggressive you are being.
Uh, I forecast based on my assumption like um in the year like 25 will be growth about 7 but after 3 years will be growth about 8% due to the expansion of production.
And if we look at your discount rate, this is a question from Moman. And he was asking about your weighted average cost of capital. And he said, your weighted average cost of capital is so high, but you're still getting a big upside. Can you tell us more about your calculation of weighted average cost of capital? And, if you are too high and we bring it down, it's even more upside.
um my WACC is high because now the bond yield is about 4% and the investor estimate to returning is about I think that now is about 10%. That's why I use WACC of 13%.
And basically, if you are, I saw that your cost of equity was quite high. And if that turns out to be high and it comes down, there's a lot more upside, right?
Yeah. Yeah, I think so.
Okay. And so from your perspective, what is the biggest risk? You've mentioned 4 different risks, but what would you say if I go and buy this stock today based upon your upside of 35%? What is the biggest risk to that upside?
From the biggest list in my mind is long term list is like they will change to use the EV charger or electricity instead of the oil. That will reduce the demand.
And so that would affect all of the companies in the industry.
Yeah.
Okay. Okay, great. So how does it feel to graduate from the Valuation Masterclass Bootcamp?
Thank you.
And how do you feel?
How do my feels? I feel that I learn a lot about how to evaluate a stock, and it different from the cost. It different uh, from the other course in Thailand, because I join many course in Thailand. Is also about the valuation uh, institute, like the Thailand, the bigger one. Yeah, I joined like 22.
And what would you say is the difference? And what did you gain from this?
Uh, what is the difference? With this one, you try us to calculation about the WACC and also the COE by ourselves. Uh, but in that course, they also teach us, but didn't have this table that show that what is the estimate and how's about the market now. We need to find every information, and sometimes I lost it because I don't get how can I find and what is the actually number that I need to use, and it will be affect on my valuation.
Mm. And from the first day of the Valuation Masterclass Bootcamp, I told you that the Valuation Masterclass is about transformation, not information. Tell us a little bit about the transformation that you went through over the last 6 weeks.
Uh, for my transformation is first, I'm very shy to present. Yeah, yeah,
But not
and
now.
now I think that I have more confidence to present and to to show my opinion and my valuation to everyone. Also, and about my valuation knowledge, I think that I learned a lot because you provide many knowledge to us from the beginning.
Fantastic. All right. Well, congratulations. You did an excellent job. And now I understand Devon Energy. And now I think we can all look at Devon Energy as a potential investment with 35% upside. Fantastic. Okay. I will see you in the Slack channel. Take care.
Take care.
Well, that was a great one on Devon Energy and an excellent presentation. It's interesting the comment she said about she was very shy in presenting, yet she did a great job in the presentation. And that's just one of the many transformations that students go through in the Valuation Masterclass Bootcamp. So if you want to yourself build that competitive advantage in company valuation and learn how to make a equity valuation report just like that, make sure to join us at valuationmasterclass.com/bootcamp. And if you act within the next 7 days, you're going to get a $900 discount. That's incredible. I look forward to seeing you in